Let's talk about equipment loan application, and I want to share with you the main documents that you really need if you want to apply successfully for an equipment loan. See, the thing is that a lot of entrepreneurs think that getting an equipment loan is complicated, but it's not. As long as you have the right documents, as long as you have the right strategy, you can get approved for any equipment loan, no matter how large the loan amount is. Like you can get it you can get approved for up to $1 million in equipment loan if you are able to have the right paperwork. Okay. So it's important to understand that the list of equipment loan documents required actually varies based on the lender. Like it depends on the lender, it depends on the type of loan, and it depends also on the type of equipment being purchased. So the thing is that some pieces of equipment are more valuable than others. Like the higher the loan amount, the more complex things could get. But you have to have the right strategy. And documents a lender may require usually include a business plan. I'll go in details later on, but I just want to give you a bird's eye view so you have a clear understanding. So you can have multiple financial statements, personal and business tax statements, and other legal documents. Because the main objective here is what? You want to give a snapshot of your business's viability and also its ability to make loan repayments for the long term. Because equipment loans actually span several years, like 7 years or even 10 years. So you want to make sure that you're telling the lender that your business will be around in 10 years. Okay. So you can actually get a regular unsecured business loan for equipment, not a problem, because the loan itself is already collateralized. So you don't have to attach any more collateral because the equipment itself, the equipment that you're buying constitute itself the collateral. Okay. And also, it's important to understand that equipment loans can be tax deductible. Okay. You can deduct the annual loan interest paid when you file your business tax return, your 1065 or your 1120S or 1120. You can also take tax deductions for depreciation. You can either claim the depreciation every year during the equipment's usable life, or you can deduct some or all of the equipment's costs during the first year it's placed in service, up to a maximum deduction of $1 to $2 million. So it really depends on how your accounting is set up. So let me talk to you about the top documents to really include this year. First of all, the business plan. If you want to apply for an equipment loan, you got to have a business plan because nobody just go like no individual just wakes up and goes apply for an equipment loan like randomly. If you need equipment, it's because you have a business purpose in mind, or you are already running a business. So you got to have a business plan. Okay, so that business plan should be really clear as to what the equipment will be used for. Maybe you want to really expand your business operations. You want to really hire more people. You want to get more projects, for instance. So there has to be a business plan, but behind the equipment you're trying to buy. So the larger the loan amount that you're applying for, the more the clearer the business plan should be. Okay, and because you're trying to really give the lender more information about the piece of equipment you want to buy. So a business plan speaks volumes about your strategy for how you will grow and become profitable. Some lenders require a business plan to learn more about the business, its operations, overall market conditions, and financial projections. Okay, so details to include in your business plan are key objectives, your target market, the description of products and services, your marketing strategy. Because if you are trying to get clients and you're trying to generate revenue, you got to have a solid marketing strategy, your market research into competitors and target customers, your mission statements, your current financial picture. So the thing is that you want to really be clear as to what your current financial picture is, and you also want to have financial projections, including the break-even point. So that's number one. So top documents include a business plan, but you also want to have financial statements. So when I say financial statements, how complex or how, let's say, how deep the financial statements can be depends on the lender. Some lenders are pretty comfortable with the basic financial statements, like the three financial statements you're speaking about: cash flow statements, balance sheet, and P&L, profit and loss statements, and that's it. So some lenders will say, you know what, we want more, because the bottom line here is the bottom line for a lender is to assess your overall financial health, your business's overall financial health, right? So this is why they might ask for three financial statements or 10 or 7 or whatever. It depends on what they're trying to study, what kind of angle, from what type of angle they are they are willing to study your business. Now, lenders use financial statements to predict whether your business has the ability to repay the loan and to determine the loan amount you can qualify for. So you are able to see exactly that there is no big delta between the potential amount you have to pay every month and how much you're making. Okay, so you want to have the following financial documents on hand when you apply. So you have bank statements for a picture of cash flow. So bank statements, it can be 3 months, it can be 6 months, depending on how long the lender wants to see your wants to analyze your cash inflow and cash outflow. Some lenders might even ask you to give them access to your bank account directly, to your business bank account. So there is a tool called Plaid, and Plaid allows them to peek, quote unquote, of course, peek into your banking account directly without you providing financial statements. Like they can see what's going on in your account live in real time. Okay. So you have bank statements. You have also a balance sheet. So balance sheet, I've said this before, but balance sheet, the purpose of a balance sheet is to show your assets and liabilities at a point in time. It can be at the end of the year, at the end of the month, at the end of, it's really a financial position at a point in time. So that's for balance sheets. You also have profit and loss statements. So here you are speaking about your revenue, your expenses, and revenue. When it comes to financial statements, you also have a third financial statement called cash flow statements that shows your cash flow from operating activities, cash flow from financing activities, and cash flows from investing activities. Okay, so this is kind of important also from time to time. And also there is a fourth financial statement called statement of owner's equity. That's really also important, especially if the lender wants to see who's behind the company. Okay, who owns the company. And you also have revenue forecasts, personal and business income tax statements for the past 3 years. So your 1040 for the last 3 years, but also your 1065, 1120, or 1120S for the last 3 years, and also your personal and business credit history. So this could be your FICO score with TransUnion, Equifax, and Experian, as well as your Paydesk score at Dun& Bradstreet. That's on the business side. Your Paydesk score with Dun & Bradstreet, your Experian business credit score, and your Equifax business credit score. Another document that a lender wants to see if you apply for an equipment loan is a purchase or a finance agreement. Okay, and the reason is that the lender just wants to make sure that the funds will be used specifically for that equipment purchase. So if you bought your business from another individual, you also need the business purchase agreement. Okay, so a business purchase agreement will have information about the buyer, seller, and equipment or assets purchased. It also does something else that I love a lot, and that's really important for the lender, because it also outlines the responsibilities that the buyer and seller have toward the business after the sale. After the sale, and this is important if the previous owner will still retain some ownership or employment. Especially there are some industries where when you sell a company, you still want to retain that expertise, right? Because the expertise is so rare, or the expertise is so I don't know. So it's just that the lender wants to know what kind of chain of authority or chain of ownership still exists. Likewise, if your business is a franchise, you will need to provide the franchise agreement granting the rights to operate under the franchise brand. You also need to supply accounts receivable and accounts payable. So, along with the other financial statements required for an equipment loan, lenders might also need from you an income statement showing your business's revenue and expenses. So, seeing all accounts receivable and payable helps the lender understand your current financial situation. So, this is something that's really important, especially from a scalability point of view, from a long-term point of view. So, different lenders have different requirements, right? Different lenders have different requirements for how much revenue you need in order to be eligible for the loan. Many top small business lenders will have low revenue requirements to keep their loans accessible to businesses still in the growing phases. So your business might be in a growing phase, and the lender understand that. Other documents that are required to apply for an equipment loan include equipment specifications and quotes, and also the appraisal. I mean, the appraisal is quite essential when it comes to the value of the equipment itself, the monetary value. So when I say equipment specifications and quotes, basically when you apply for equipment financing, you need to provide detailed information about what you plan to purchase, right? Because you're asking the lender to give you money so you can go and buy that piece of equipment. But the lender wants to be sure that money will be used for that specific purpose. So basically, the lender wants to see some equipment specifications. This typically includes manufacturer specifications, manufacturer specs, model numbers, serial numbers for used equipment, and official quotes from vendors. So it's just that the lender wants to make sure that this is a legit transaction and that you're not selling something counterfeit or something else. Okay. So for substantial purchases, many lenders request quotes from multiple vendors to verify you are getting fair market value. Like you're not really overpaying for stuff, like crazy, a very crazy price for stuff. So for used equipment, expect to provide additional documentation such as maintenance records, operating history, and current condition reports. And so those details help lenders assess the equipment's remaining useful life and potential resale value, key factors in determining loan terms. Because if something were to happen, the lender is also thinking about their is trying to cover their back too. So if something happens and you're defaulting on the loan, the lender will need to seize the asset and resell it. So that's why they want to see the resale. They want to see the potential resale value upfront. You also have the appraisal. So depending on the types of equipment or how much equipment you are buying, the lender may want an appraisal to determine the commercial equipment's true value. And the lender is more likely to require this documentation for used equipment since the valuation will factor in the equipment current wear and tear, right? So that's really important. You also have legal documents. So lenders actually who offer equipment loans will need to see that your business is compliant with registration and licensing requirements to run legally, because they don't want to really lend to an illegal, quote unquote, illegal company. Okay, so documents you may need to provide. You have business entity documents such as articles of incorporation, business licenses, commercial lease if applicable, contracts with third parties, and also your employer identification number. And this is actually regardless of whether or not you are an LLC, a C corporation, an S corporation, or so on and so forth. Okay, so to look up your EIN, you can check business financial documents like recent income tax returns. Otherwise, you need to call the IRS directly to retrieve the number. So you also have to understand that you might have to provide SBA documentation. Let me explain. If you are pursuing equipment financing through an SBA loan program, like the 7A program, additional documentation will be required, especially because the government is backing your loan. The government through the Small Business Administration. Okay, so the United States government is backing your loan. So because the government is partially or like is directly or indirectly guaranteeing your loan, they want more information. So the SBA offers several loan types with varying requirements, but all typically require SBA Form 1919, which is the Borrower Information Form, at a minimum. And SBA loans generally have stricter documentation requirements, but they offer competitive terms and higher guarantee percentages, up to 85% for loans under 150,000 and 75% for a larger amount through the 7A small loan program. You also have to think about your debt schedule. So lenders are increasingly concerned about businesses' existing debt levels, like your company's DTI, debt to income ratio. So this is really important, and you do not want that ratio to be too high. Okay, so basically, if you provide a comprehensive debt schedule detailing all outstanding loans, monthly payments, interest rates, and remaining terms, you are basically showing the lender that you are showing the lender that you are very transparent. Okay, you're transparent about your financial picture, and you're helping the lender access your repayment capacity. So bottom line is that equipment loan applications require substantial documentation to prove your company's financial health, legal standing, and ability to repay the loan. In other words, you need to show that your business can handle loan payments. So while specific requirements vary by lender, most will request financial statements, business documentation, and detailed equipment information, especially because of the fact that you are trying to have a loan agreement that's essentially collateralized. Anytime you have equipment loan, you are collateralizing the transaction. Okay. Now, online lenders typically have more streamlined documentation requirements than traditional banks, but they may charge you higher interest rates. Small banks continue to offer the highest full approval rates at 54 to 60%. Okay, but the thing is that you get approved, but you'll pay more with online lenders. But with smaller banks, you if you get approved, you have the chance to have a lower APR. Bottom line is that before applying, you want to contact potential lenders to confirm their exact document requirements, as being well prepared can significantly impact both your approval chances and the terms you actually receive in the end. I mean, this is a relationship you're trying to build, right? Think of it that way. In conclusion, to this conversation, I spoke to you about the top documents required to apply for an equipment loan. I give you the overview and then the top documents. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.